Can you really lose all your money in the stock market? That's the number one fear I hear. Today, I'm going to show you why, for 99% of people, that's practically impossible with the right strategy. We'll also dive into Nvidia's incredible surge, what to expect from Microsoft and Meta's critical earnings reports, and the one thing Jerome Powell could say that might derail this entire market rally. Most people who say they lost everything in the market made one of three mistakes. They fell for a scam, they engaged in high-risk day trading, or they bet on a tiny, unknown company that went bankrupt. That's not investing, that's gambling. Real investing, the kind that builds long-term wealth, is different, and the simplest, most effective way to do it is by buying the S&P 500. This is an index that represents the 500 largest companies in the United States. By buying it, you are so diversified that the risk of losing everything is almost zero. It's the strategy I recommend most. Understanding this is the first step to investing with confidence. If you're getting value from this direct approach, hit that subscribe button right now so you don't miss our future analysis. Now, let's look at today's market, because things are getting very interesting. The S&P 500 and the Nasdaq are hitting all-time highs, but there's a strange disconnect. At the same time, major tech companies are announcing layoffs. It seems artificial intelligence is already having an impact on the workforce. This week is critical. We're getting earnings reports from giants like Microsoft, Alphabet, and Meta, and the market is laser-focused on one number: CapEx. CapEx, or capital expenditure, is simply the amount of money these companies are spending to build the future of AI. If they announce massive increases in spending, it signals that the AI revolution is accelerating, which will likely push the market even higher. And who benefits most from all this spending? Nvidia. Nvidia has been on an unstoppable rally. It's not just a chip company anymore. It's the arsenal of the United States in the global AI race, building the supercomputers that will power everything. Its strategic position is so strong that we should probably update our price targets for the stock. The market may still not be fully grasping how massive this is. While tech is soaring, what about safe havens like gold? Some analysts are saying the gold bubble has burst. I completely disagree. What we're seeing is a healthy consolidation, a pause before the next leg up. Governments around the world continue to devalue their currencies, and that's a huge issue that I'll explain in a moment. I still believe gold is heading towards $5,000 by 2026. This dip looks more like an opportunity than a warning. Now, let's talk about companies solving easy problems. Caterpillar, for example, just reported fantastic results, beating expectations. Its performance is a great thermometer for the global economy. It shows that even with all the focus on AI, the real-world economy is still moving. I'm also keeping an eye on OTIS, the elevator company, which looks interesting trading below $100. On the other hand, we have a cautionary tale with Mercedes-Benz. They announced good results and a share buyback, which is positive. However, I'm very concerned about their long-term ability to compete with the wave of affordable, high-quality electric vehicles coming from China. Good news today doesn't erase a huge threat tomorrow. And this brings us to the biggest risk on the horizon, the Federal Reserve. This week, Fed Chair Jerome Powell will speak. He holds the kill switch for this market rally. The market is high on the expectation that the Fed will inject more liquidity, essentially print more money. If Powell comes out and makes it clear that no more liquidity is coming, we could see a significant drop. He is the one person who could stop this party. This ties into that currency debasement problem I mentioned. While we focus on stocks, the cash in our bank accounts is silently deteriorating in value every single day. This is why assets that governments can't print, like gold or even cryptocurrencies, are becoming increasingly important for protecting your wealth in the long run. So what's the final takeaway? Don't fear losing everything in the market. Protect yourself by investing in diversified assets like the S&P 500. The AI revolution is the dominant theme, with Nvidia at its core, and keep a very close eye on the Federal Reserve's next move. Don't let the market's mood swings dictate your decisions. Use these moments to your advantage. If this video helped you see the market more clearly, make sure you're subscribed for more. Now, I want to hear from you. What is the one stock you are watching most closely this week? Let me know down in the comments.